Hello there, fine acquaintances. We are halfway through 2026, and you know the fact that if Anthony's wearing a blazer and a nice shirt, that means it must be market update time. That's right, in today's video, we're going to go over the stats, the facts, the figures, what's going on in Northwest Arkansas's real estate market, what does it mean to you as a buyer and seller, and where are we going next? A little bonus section in there for you. You know who you are, clients that are looking for lake property in Bella Vista. I'm not going to leave you out. If this is your first time to one of my market updates, please understand, I try not to get too deep into the weeds, but at least give you enough information so you can help make an educated decision and really understand how's the market. Just like updates in the past, I review Benton County houses, not condos, not townhomes, not duplexes, and just Benton County. Please understand, if you're looking at Northwest Arkansas market, Benton, Washington, and Madison counties make up Northwest Arkansas. Benton County being the most expensive, and then Washington County below that, and Madison County every single time is going to be even more cost effective and lower sales than Benton and Washington County both. You know, these market updates started coming from people asking me, Anthony, how's the market? Well, I want to answer that for you, but I don't want to do that on a weekly basis. But here on a quarterly or half the year basis, that certainly can help you make an informed decision. I like to look back at the last 10 years data to help gain some sort of a trend line, to gain an understanding of where the market is compared to maybe years past, like maybe in 2020. We all know that 21, 22, and 23, the market during those years were absolutely bananas. Interest rates, which we'll get to later on in the video, were absolutely bananas as well. So how does that factor in? Where are we at first half of the year? Total sales in Benton County first half of the year, 3,217. That's actually the highest amount of sales we've had first half of the year since 2022, but more in line with 2019. James, let's go ahead and pop up the chart here. My friends, here is the last 10 years worth of first half. You can see here in 26, we had 3217, as I'd mentioned a moment ago, with our high years being 2020 through 2022. Here's a good place to pause for a second and help remind you that real estate is hyper local. Where you might be coming from in a different market, sales may be down, not sale prices, but the amount of sales may be down. We're actually up, trending up over the last few years. When we're going to get into prices here in a second, your market again might be down year over year, whereas here in Benton County, we're actually up. Speaking of average sales price, James, let's go ahead and pop up the last 10 years worth of first half sale prices. As you can see, $477,906. We're up just about $2,000 where we were on average from 2025. Now, I've done an analysis for a client of mine about a week ago talking about just downtown Bentonville properties. Downtown Bentonville properties are down about 7%. Just downtown Bentonville. That can show you how Benton County as a whole is actually up, whereas downtown Bentonville specifically is actually down. And I'm sorry, you're probably going to be crying in your soup when you look at 2017 compared to today. We're up nearly $250,000 since 2017's numbers.
This is not fair.
Again, these are averages. I have median numbers for you as well. Please know that median sales price for the first half of the year here in Benton County was just shy of $400,000 at $392,500, which coincidentally enough is the same exact what it was in 2025. The next metric I love to hate, so I'm not going to go over it very much, is price per square foot. Let's just show you the chart. You can see here that back in 2017, it started at $104 a square foot, and in the first half of 2026, we're averaging $223.09 per square foot. Little reminder, price per square foot is not the end-all be-all. It does help with conversation, but when you're looking at two different houses with different amenities, price per square foot can change quite a bit. This next metric I want to pop up here is very telling to show you list to sell ratio. If someone listed a property at $500,000 or $750,000, what was the final sale price? This will show you an indication of where our current market is in comparison to how it's been in the past. Of course, as you can see here, 2021 and 2022 were over 100% list to sell ratio. People were getting more on average than they did when they listed the property. They're getting more for it. Whereas here in 2026 at 98%, that's very similar to 2019, 18, and 2017 respectively. That tells me we're starting to see a bit normalizing of a market. dare I say, a balanced market. More on that here in a second. Typically, I would also include days on market, as that is another indicator. Many people want to know how many days on market. Are homes sitting longer? Unfortunately, the program that we use was miscalculating days on market. What it was doing was looking at from list date until close date as days on market. What most people want to know is days to contract, from list date to pending date. That's what our system has now changed to. So unfortunately, when I look back in years past, the days on market look completely skewed. For instance, in 2021 and 2022, when homes were just flying off the shelves, our system said it was 86 days for 2021 and 76 days on average for the first 6 months of 2022. Whereas here in 2026, homes are sitting on the market a bit longer than what they were back then. Remember, you could almost whisper and say your house is for sale and it would be gone. Quick days on market. So for here in 2026, our system says that our average days on market is 56. That's more days to contract, from list date to under contract date. You may be saying, hey, Anthony, thank you so much. These numbers are great, but what's the story behind it? What is that telling us as a buyer or a seller? Well, what it's telling me as a broker, someone that might be helping advise you on a buy or a sale, is that here in Benton County, properties are still appreciating on average, not every single home. It also tells me that build costs are continuing to rise. We're still seeing home sale prices go up. So we're seeing a lot of people move to our area. Northwest Arkansas Council says 39 net people per day are moving to our area. And that list to sale ratio number is an indicator letting us know we're normalizing a little bit. People are still getting good values. As a seller, you're still getting a good value for a home, but buyers aren't having to pay over list price for a home on every property. Some of them are. Which leads us into our next conversation, and that's a balanced market. Many of you might be wondering, what in the world is a balanced market? It's either been a seller's market like it was in 21, 22, 23, or maybe more like a buyer's market that you experienced in 2010, 2012, back when the housing crisis had happened. Let me help define it for you real quick. A balanced real estate market is when there's about 4 to 6 months of supply in any given market. Now, months of supply are calculated by current inventory divided by the average month of homes going under contract for the last 6 months. Here in Northwest Arkansas, there's around 2,267 active homes for sale, and over the last 6 months, we've averaged right around 536.17 home sales per month. That tells me there's 4.22 months of supply, so we're right there in an early stage of a balanced market. Balanced market's a great thing. It's a great thing for both buyers and sellers. If you're a buyer, that means there's a little less pressure when it comes to a brand new home that hits the market. You have some time to make a decision. You have the ability to do maybe some financing and inspection contingencies. There's less bidding war activity as we might have saw back in 21 and 22. This means there's more accurate pricing, ultimately reduced buyer stress. In fact, I'm helping some families move from out of state right now, and one property that we went for went in multiple offers within a couple days of it hitting the market. And although we wrote a very strong and convincing offer, we were number 2 out of 4 offers that came in on that property that weekend. The good news is since then we've had a chance to really just sit back and kind of retract, analyze the market, see where things make most sense, and now we've actually put in an offer. Now we're under contract for something less than list price with some concessions and personal property built in, and my clients feel even better about the opportunity that we are going forward with right now. It's been a great thing having a little bit slower of a market as a buyer. Now, as a seller, what does that mean to you?
Let's hear it. Yeah, let's hear it.
That means, sellers, we cannot be testing the market on high listing prices. Now, what I've seen in the market is many sellers who are getting their homes under contract in multiple offers or within the first week to 10 days it's priced right from the start, but combined with pricing it correctly, many buyers in today's market are not wanting to do any updates. They're not wanting to paint. They're not wanting to put a new carpet. They're not wanting to have to maintain the outside yard. They're wanting that home to be picture perfect, ready to go. Because again, like we had said just a moment ago, buyers have options. So if you're a seller and you're looking to sell this second half of the year, I would really encourage you to get really tight on the numbers and make sure that you either have concessions ready to go for a buyer, if there's maybe a carpet allowance that needs to be had, or perhaps the roof needs to be replaced. If I was you, I'd be ready to receive some objections right off the bat if the home isn't priced right, and if those deferred maintenance items aren't addressed prior to listing the home on the market. What do they say? You don't get a second chance to make a first impression? That's really true in this type of market. Sellers, the good news is homes are still selling. They're just not selling in the first weekend, or maybe the first 3 weeks, or first couple months, actually. Now, Northwest Arkansas market is very cyclical. Typically, once school goes back into session, things tend to fall off quite a bit. So if you're looking to sell in the second half, you really need to get tight on those numbers, really need to get tight and cleaned up on those deferred maintenance items. One last bit for sellers before we move on to the next section is sellers, rest easy. We will not get into a buyer's market until we have over 6 months of supply. Right around 5.5 months of supply, you'll really start to notice that compared to what it is today. However, buyer's market, when everybody's getting contingent offers accepted, everybody is giving concessions and lowering price and bowing down to the buyer and whatever the buyer wants, that's not a market that I don't foresee we'll have here in Northwest Arkansas for the foreseeable future. I told you there'd be a little bonus section in there, my friends. If you're looking for a lake property in Bella Vista, Arkansas, not Beaver Lake, on one of the 7 lakes in Bella Vista, I want to encourage you. You may be a little disappointed because May and June, there was only like 5 or 6 homes total listed between both of those months combined on the lakes in Bella Vista. But please know, Bella Vista has averaged 62 listings per year since 2017. And here we are in 2026, halfway through the year, and we've had 33 listings on the lakes so far. If I were to predict, which is always a bit risky when you're going to predict, I would say that July, on the low end, 6 to 8 properties are going to get listed in July in Bella Vista Lakes. On the high end, 10 to 12. Could be primed for a late summer bloom for lake listings in Bella Vista. That said, maybe another 25 to 30 lake listings before the end of the year. What kind of market update would we be doing if we didn't talk about interest rates? Now, I have to tell you, have to disclaim right up front here, I am not a lender, nor do I ever have any aspirations of being a lender. So I want to make sure that loud and clear, I am not a lender. I'm not quoting rates. I'm telling you what I'm seeing on Mortgage News Daily. It wasn't but the beginning of the year when we saw mortgage rates in February dip down into the upper 5s. You may be sitting there going, 5s, Anthony, that's high. Okay, let me take a deep breath before I get all sideways on somebody about how interest rates are high.
You want to fight?
But let's go ahead and pop up this chart from Mortgage News Daily showing you what interest rates have been since the 70s. You can see in September of 81, when I was 5 months old, that interest rates peaked around 18.25%. Now, of course, the average home back then was like 7 blueberries. But here we are looking at 2026, where we're averaging right around that 6.25, 6.5, or 6.75 points. People are saying, Anthony, that's high. Yes, compared to the unrealistic interest rates that we saw back in 2020, 2021. Remember earlier when we talked about how maybe the amount of houses started dipping down? Well, if you look here on this next chart, you can see that right around June of 2022, interest rates hit above 6% for the first time since 2008. So that had a lot of people scared. There was a lot of news outlets, a lot of media saying interest rates are going through the roof. Pun. Actually, the average 30-year fixed interest rate over the last 40 years has averaged 7.31%. So we're actually below the 40-year average. So rates are considerably low in my lifetime.
Boom. Roasted.
Another thing to note on interest rates, you may have heard this before, interest rates go high quickly, but it takes them a while to come back down. So if you're sitting there as a buyer and you're thinking, I'm just going to wait until interest rates get back down into the 5s. Now again, that's not a crystal ball up there, that's a baseball. I have no way of predicting the future, but if I was a betting man, which I'm not, but if I was, but I'm not, I would bet to believe that we're not going to see interest rates back in the 5s unless you're buying down points. I would bet to see we're not going to see the 30-year fixed back in the 5s, maybe not until this time next year. Of course, things can happen, and it's always risky trying to predict the future. Don't stake your claim on it, but just know that the best thing that you can do is interest rates are what they are. We're not going to go back to 2021, 2022 when interest rates were in the 2s and 3s. That's not going to happen. So if you and your family need to buy a house, you need to sell a house, have a conversation with your real estate broker, and let's make that happen. All right, so what else are we predicting for the second half of 2026? Well, I'd bet to believe, just like 80% of the last 10 years, the second half here in Benton County, we've seen more homes close in the second half of the year than we do in the first. We're not talking about a lot, but typically Q2 and Q3 here in Benton County seem to be the highest quarters. I know those are the highest quarters as far as my personal business is concerned. It's a noticeable drop-off once we get into the winter months. I would bet to believe we're still going to see prices continue to rise, although seasonal slows in August, September, we'll probably see prices start coming down. Some of those folks that couldn't sell in the summer months are going to start chasing the market down once school goes back into session to try to get their home sold by the end of the year. My friend, it's always a pleasure to put this information together for you, and now you know a little bit more about what life is like in and around Bentonville. Thanks for watching.